You've been working for 3 or 4 decades, and likely you've been saving in accounts like 401ks where you had to choose your investment elections. Well, when do you change those elections when you go into retirement? Do you do it well beforehand to make sure you're not taking too much risk? Do you do it later in your retirement years because you could be in retirement for 25 or 30 years? Let's ask a financial advisor. I'm here with Carl Gill. He's the founder of Asset Preservation Capital. Carl, this is a big question, especially after we've managed our accounts on our own for decades. When do we change our asset allocation for retirement?
Well, first of all, it has to do with how young you are, because if you're younger, you can change it more frequently. And then secondly, it depends upon your risk allocation. If you're young and you're still working, then you can freely become a little bit more aggressive. If you're older, you don't want to take as much risk because it's going to take a lot longer to recover from any mistakes.
Okay. And we hear the word a lot, diversification, and how exactly you do that. And you go to somebody's retirement seminar and they'll show you a pie chart up on the board up there. But do you have to try to teach people along the way what diversification really means, especially with their own 401ks?
Yes. In the very beginning of my career, I would have people brag to me that they were well diversified, that they had a portfolio of 12 different CDs. And they were all CDs. They weren't diversified. They were all sitting in one basket of fixed rate investments. Real diversification means balance. And in order to have balance, you have some stocks, you have some bonds, and some are fixed rate, some aren't fixed rate. But you want to have something that gives you the peace of mind that when unforeseen things happen, like COVID, or like a corporate bankruptcy, like with GM, that you're protected and you're not going to lose everything if you have all your money in GM stock and it goes bankrupt like it did in 2008. And I got a thank you card in 2011 from one of our investors who said, "Thank you, Carl, for encouraging me to safely diversify and not have all my money in just the corporate stock."
And we totally understand. People take pride in what they do here in Michigan. And if you have the opportunity to acquire company stock, that can be a good thing in your portfolio, but in a proper mixture. I mean, let's think of it this way. You're putting your time into the company. You're putting your money into the company. That's having a lot of your eggs in literally one basket.
Correct.
So what can you do with company stock then? Because sometimes you'll actually get it at a discounted rate or you get it at a good timeline, right? So we acquire, and then do we want to eventually sell that into the open market, or do you help people manage this? What do we do with that?
I do both. I help people manage their 401k plan, and within the 401k plan, we can pick out better choices. And so, for example, we do if they had 80 or 90% of the money in corporate stock, we might reduce that down to maybe 10% of corporate stock. If they have 80 or 90% in bonds, again, we might trim that back on down to maybe 25% in bonds, depending upon what the bond markets are dictating, and it depends upon what the stock market's dictating. If the market's hot and it's on an upturn, why not participate in it? But don't have all your eggs in one basket.
I think you'll remember this because you've been in the industry for a while and you have several different securities licenses. There had been a time when the SEC and the industry didn't want folks, advisors, helping people out with their 401ks. But it seems now, especially as people get closer to retirement, we have things like in-service rollover. You can continue to work and have a financial advisor help you. Have you been able to help somebody with their 401k while they were still working?
We took one gentleman, he just called me up and thanked me again last week because we have taken him from $220,000 to $1 million within about 6 years, 7 years. And he was very pleased with that, to say the least.
Now, I have to say this, of course, for compliance reasons. Some of that can be due to the market growth. Of course, the matching of what happens. We've seen a lot of growth over the last several years, but you changed some things in there, the asset allocation of what he was actually investing in?
Yes. We took him from an overly conservative fixed rate return, getting about maybe a 4% return on his money, to getting 14 to 24% returns.
And then, would you see maybe pulling back on that as this person gets closer to retirement?
Yes, we just did that about a week ago.
All right. Folks, if you're trying to figure out what you should be doing with that 401k, Should you be rolling it over and managing it yourself? Well, ask yourself this: how did you manage it even before you got to your retirement? You can get help with that right now. Call the phone number you see on the bottom of the screen. You can get started on your own portfolio review right now from Carl Gill and the team of Asset Preservation Capital. There's absolutely no cost to you. What exactly should you do with that 401k? Let's find out exactly what you should do with that right now. Call the phone number, schedule your appointment. Thank you for watching.